What if you could apply analytics, marketing, artificial intelligence, and machine learning to create digital banking experiences as personal and as strong as your in-branch experiences and relationships? That's what we'll be exploring today. Hello and welcome to the Predictable B2B Success podcast. I'm Vinay Koshy and our guest today is Rich Edwards. Rich, you are the CEO of MindSpan Systems, which helps B2B financial institutions transform themselves with data-driven strategies and technologies. Your area of expertise is the convergence of analytics, marketing, artificial intelligence, and machine learning, more specifically for financial institutions. In fact, I believe you worked with banks, insurance companies, and financial services as clients worldwide during your career. And you've actually led product strategy in data center automation and artificial intelligence, including the launch of IBM Watson Developer Cloud. I'm curious, working with IBM, I'm sure, was looking at high-end financial applications or applications in the fintech space. Why focus on building out MindSpan systems and solving problems that it does today?
Oh, sure. First of all, thanks for having me. I appreciate the opportunity
Pleasure.
to come here and talk to your audience. Yeah, from my background, I spent about 13 years at IBM in a couple of different business units, and not necessarily through any deliberate effort of my own. A good chunk of that was spent with financial services, banking, certainly on the enterprise side, considering where IBM is, but I was very much a software product guy. That was my background. So I did a lot of things in data center automation, high availability disaster recovery. A lot of the products that we worked on and a lot of our customers were very large financial institutions. So banks, investment banks, trading institutions, obviously a lot of government institutions, and this was worldwide. And so that was my beat for a number of years, understanding the particular needs, particularly on very high fidelity of services, very high availability, things that had to pass very high security requirements, audit requirements, availability requirements. There's a reason why you've never had an ATM transaction go sideways on you. And it's really just the immense amount of security and reliability that goes into the back end of those systems. And a good chunk of that was some of the things that we worked on, some of the things we helped customers. And then about in probably midway through 2013, I got tapped. Again, not something that I necessarily sought out, but got tapped to go look at starting an API-based platform service around artificial intelligence. And this is what would become the Watson business unit. And that was a bunch of different stuff. It wasn't just one thing. And my role there was really the old guy that's been around the block a couple times and knows how to get things through the IBM machine as far as creating new offerings and getting them to market. But it was also this awesome opportunity to work in this brand new space to just talk to the who's who of in this space and drink from the fire hose around a new technology, what I believe is really a new wave in how technology is going to change society, and spent 4 years doing that in the Watson area. And then because of my background in finance, I became the financial institution use case guy. So I was the guy that would make all the rounds at Wall Street and in London with Canary Wharf and Zurich and all over the place to talk to our customers about what we were thinking, what they were thinking, how they could apply this, and really dig into some of those use cases. And I got to a point where I was really more interested in doing something on my own and scratch that entrepreneurial itch that probably 2 or 3 times before in my career I had taken a look at and got to this decision. One of those pros and cons list things at the point in my life of being in my mid 40s said, all right, you're either going to do it now or you're not going to do it. And that was my kind of chance to make a move there. And I think largely on the belief of where this was going and being able to leverage my experience and everything, and look at a smaller company that had the core talent, the core skills, the core experience, particularly around data storage, data manipulation, data governance, all the things about let's take tables and rows of information that we have in many different places and be able to use it in a way to better serve our customers. And that was really what I was looking for and found MindSpan Systems, and it was an opportunity for me to join them and lead them in the next wave of what they were doing. So that's how I got from A to B from that
Lovely.
standpoint.
Brilliant. And so really the application could, or the ultimate application could be used on a variety of different companies, especially in the B2B space as we play with data and try to leverage
Oh,
it.
yeah, no, absolutely. Yeah.
Yeah. But the idea of, I guess, starting out with community banking institutions was to serve a particular niche and make your mark there, was it? Or was it something else altogether?
Yeah. Where MindSpan had really been doing well is with companies that were in regulated industries, financial services, banking, insurance, but then also on the healthcare side. So there were a couple of healthcare, health tech companies that we worked with that we've enabled, several large manufacturers of medical equipment technology, and like things where you get into or brush up against regulations like in the United States, we have the HIPAA regulation, which is around personal health information and personal identifiable information. A lot of traditional technology, services, a full stack of a solution, things like that are like a third rail, right? Because they carry with them often like outsized levels of liability that are required for anybody that goes in there. And frankly, it requires an immense amount of trust on the part of your client that who's going to let you come in and touch their customer information. So there's ways you have to be able to present yourself to operate, particularly when it comes to like vendor risk assessment. And this is no more greater than you see that in the banking industry. And that was just something that was a core competence to my family. They were able to do that and had traditionally been focused more on IT outsourcing, IT projects, digital transformation, things like that, where there was a very clear vision of where they wanted to go. Say things like core banking platforms. So think like ERP for banks, right? Like that level systems. We dealt with a lot of customers that were going to make vendor changes. And that is a non-trivial exercise, particularly when it comes to data migration, right? The amount of ETL work that goes into something like that, like extract transformation load, where you're taking information from one location, putting it into a format and a structure that's going to make sense for where you're putting it, and then putting it there. That in that context of a regulated environment of where you're going to have to deal with audit requirements in the back end, it adds a layer of complexity and it requires a level of experience that you don't generally find, except in specialists, except in very focused, narrow focused organizations. Anyway, that's where we got into it. And I really wanted to bring in with what I thought and some of the people that I brought in the company around this look of what is this next wave look like? What are the opportunities for our clients that work in this space, particularly the regulated environment? How can we help them? And what can we help them do with particularly their first party data, the data that they have that is not generally available, that if we're going to talk about what's new and hot today, things that haven't been put into the training set in chat GPT, for example. What do you know about your customers and your market that your competitors do not? And how can you use it to give you an advantage, to make you more valuable, to be able to add more value to your customers? And while a lot of what we do is the technical and heavy lifting on the data side, those are the type of problems that we're really solving.
Yeah, I would imagine that community banks in the US, or to perhaps what we have here in Australia, rely on the fact that a more personalized experience with people who are perhaps more familiar with the local suburb or area is a point of differentiation and added value, if you will, to their potential customers, existing customers, of course. Given all that we're seeing in the world today and this push to reduce costs and to be leaner by automating it, providing services online. Is that something that you're finding these community financial institutions embracing, or is it a bit more of a struggle for them to make that leap in order to keep that same level of personalization and interaction, that high touch interaction as well with
Sure. No,
customers?
absolutely. I think, yeah, you hit it on the head there. It was one of the main aspects of what that market looks like. Yeah, you talk to any smaller institution, right? And to put a number on it, some of this has some regulatory reasons for it, but there's usually a pretty hard divide between about $10 billion in assets. And this is like a balance sheet view of the financial institution. Anything below that is considered either a smaller credit union, which is a particular type of nonprofit financial institution in the US, or a community bank. Small number of branches. More than that is you start getting into something that's referred to as a regional bank, and then all the way up to multi-trillion dollar, very large banks, JP Morgan Chase. But you talk to anybody on the smaller end, on the lower end, particularly that sub-billion size, and you ask them, what's your differentiator? Like, why are you special? How do you compete? And it's always almost unanimously it's service, right? It's the level of personal service that we provide our customers or members. And that is absolutely true. You can look at it actually just from doing an analysis of like their financial statements, because you get per customer, per dollar of asset, however you want to split that out, they have way more people, way more cost from a salary standpoint than the larger competitors, which means they have a very different business model. That doesn't necessarily say that they're not competitive. It's just they're competing in a different way. And it's less, I'll use the term industrialized, it's less leveraged from a personnel standpoint and rely on way more the frontline offerings, the frontline people, tellers, personal bankers, the people that do the closing and sales on say the mortgage side or some of the business products. And perfectly valid, perfectly approachable way to do it. You look at things like small business loans. There's programs in the US from the Small Business Administration about how the government will underwrite and take risk for certain size loans to small businesses. Commercial real estate is another really big one. And then in agricultural space as well, for agricultural businesses. Those are businesses that small community banks and credit unions punch way above their weight class in. They're way overrepresented in it because they know how to serve that client better, particularly in the commercial real estate, because it requires to be good at it. It requires an intimate level of that local market. So their ability of having this large local presence, executive level, bank leadership level, the individual, say, credit officers that are making credit decisions, they live in those communities and understand the dynamics of what is going on and are able to certainly look at things in a different vein and take on business that are larger, much more leveraged, much more developed, spread out from that standpoint. Somebody that has more of that industrialized business model for how they're doing it, they're not going to fit into what that large bank wants to do. And so that's why you see those type of businesses way overrepresented in the community bank. So there is a place, right? It's not them having more people per customer is not like an inefficiency that they necessarily need to see to be rooted out. Right? Perfectly valid. Some of these institutions over 100 years old, like God. The problem is they don't have large infrastructure behind it, right? Yes. You look at the core banking applications that institutions of this size buy, and there's 3 vendors that have something like 75 or 80% of the market. And they are perfectly happy to serve them and do well, but they are not on the bleeding edge of innovation for what they're bringing smaller institutions. And you look at the feedback and the NPS reports for what these vendors get from smaller institutions, and it reflects like they are not happy by and large because they don't feel like they're being kept really competitive at that level from a technology standpoint. So you will find no smaller institution that says, yeah, we're going to compete on technology. We're going to be this like cutting edge player. They're like, no, the best we're going to be able to do is a fast follower, and fast might be 5 to 10 years, right? Which is the technology space is not fast, but that's their play. So what you find is they have this great personal in-branch experience. They put an enormous amount of effort in the training of the first line personnel. They are very responsive, do very well, are able to do things that larger organizations that have to rely more on much harder, much more brittle process, much more rules based for how they approach things. They are able to outmaneuver them in that standpoint from that customer experience. That customer experience, though, once you leave the door of that like in branch face to face piece, it falls off quickly.
Mm.
So their digital channels typically don't have that same level of differentiated personal experience. And that's where it falls down. And that is where I believe there's a huge opportunity for that, is to be able to leverage a lot of that information that they know that they have about their markets, about their customers, about their potential customers, and extend that personalization beyond that face-to-face experience. And to do that without a multi-million dollar enterprise level software implementation project, not really required, because all of the piece parts that you need, you either already have, or you can very easily add as a SaaS application, as an API product that you can bolt on to the core of what you already do.
Is the struggle really the know-how of being able to string all these bits together in line with the data that they already have, or is it more about leveraging data that they have but not knowing how to?
Yeah. So one of the problems becomes, we like to say we're there to help people who either have to wait in a very long line to get help or they have no line to stand in. Is to say at this level of organization is really seen more like a utility. And when they look at things like customer data, it is seen through the lens of risk. It is seen through the lens of compliance, which means whatever you do not have a data breach, do not lose PI, do not have a breach where we're going to have to notify all of our depositors and lenders and tell them that somebody got into our database and we lost their social security number. And that's just going to blunt the trust in our institution, because that is like absolutely sacrosanct, a core part of what their value is. And all of that says is what you get to is when they think about governance, whether you want to think about little g or big G governance, right? It's all about whatever you don't lose control of the data, which gets you into a posture of never let anybody use the data. Let's like the idea of leveraging a lot of what they have from a core transactional standpoint to build a data model of, let's make a model of the customer lifetime value of our top customers, and then use that to drive a data-driven client profile that we should use to go bring in high value customers, right? Let's use that to create our lookalike audiences that we want to take to, and most of the time we're using agencies for this, but like our digital ad buy, right? To create those lookalike profiles for what we want. Not that they're not doing it, but they're rather superficial. They're not as tight and laser focused as they could be, and certainly not as effective as they could be. And so they're working with one hand tied behind their back. And there really is an opportunity for them, like they do in some of their product lines, to really punch above the weight class, to do much, much better because they have the data available to them. The implementation of the data is not the hard part, maybe even on the cost side, to begin to show this and make everything that they're doing, if not immediately accretive, very quickly, like short sales cycles. Because you're talking about like consumer financial services. They're not spending 6 months trying to close a deal here, right? These are 2-week, 30-day cycles where they're doing campaigns that are omni-channel, right? And they're currently leaning heavily into obviously Facebook and Google on the digital side, but then also direct mail, like huge direct mail as far as their advertising. So you talk to a lot of like businesses and what percentage advertising is direct mail. And it's outside of some segments, and particularly like older established segments, it's not substantial. And that is not true for a lot of financial institutions. And so there's opportunities for that, right? There's opportunities that on the surface may seem incremental, but could really change the game. You look at a lot of financial products And their cost of acquisition, even at the consumer level, is in the hundreds of dollars. And a lot of times they're using channels and tools and agencies that are much more retail focused, where they're trying to optimize for a cost of acquisition of like $8 or $9, right? For something like this kind of US numbers, or lower, right? In some cases. And a lot of times there's friction between those approaches. And one of the things when I talk to marketers, digital experience managers at banks, they express frustration in that, yeah, I'm working with a firm or I'm working with a set of tools or we're trying to do this ourselves and it's not solving our problem. It's not it's not allowing us to optimize around the things that are really going to benefit us and benefit our customers. And a lot of times they run into compliance issues. I'll give you one example of that. Anytime you do advertising around mortgages, things tied to housing, there's about a half dozen or so individual compliance checks that you're going, like different departments of the government, different regulatory requirements and hurdles you're jumping through as far as like disclosure, as far as representation from like within different economic segments, within different racial segments, things that you're doing all the right things and you're going about it in a quarter, in 6 months, in 9 months, somebody's going to come in, your examiner is going to come in and look at what you did and make a determination, sometimes in a fairly subjective manner, about whether or not you violated the spirit or the letter of one of these regulations. And what they find is the vendors that they're working with have no appreciation of that and offer them no guidance, right? No sense of, great, you've done this great campaign for us. Am I going to be in trouble with my regulator in 6 months for executing on it? And they have no idea, right? And a lot of times they're having to rely on either their in-house or contracted compliance management around that. And this whole idea of like, how do we take what we know in-house, what we have from a data standpoint, and turn that into, say, an actionable campaign? How do I know ahead of time? How do I know a priori that I'm doing it correctly and I'm not going to run into a compliance issue later? Huge gap, not well addressed. There's a few players there, but it is from an experience of the marketer trying to do this, who's focused on like their market and solving the problems of their customers. It's a fragmented mess, right? And they have to spend an inordinate amount of time. It's like a very frustrating experience for them.
Poses some interesting issues there. So if I'm hearing you correctly, it's not just about leveraging first party data, it's also addressing issues of risk mitigation and building trust with your potential clients.
Yeah.
To paint the picture in our minds, could you give us an example of perhaps an institution you worked with that has sought to increase their leverage of this first party data and what kinds of results that they
Sure.
have been able to get?
Yeah. So I'll give an example of a multi-state institution we worked with. And in particular, they had a presence in California. And in the United States, California is, particularly from like a regulatory standpoint, a lot of times its own animal. They will have their own regulations. On the privacy and customer data side, there's several different layers of this. On the state regulation on the banking side, there's another different layer of it. And it just makes it complicated, right? It's attractive to them because it creates a regulatory moat. If you figure it out and you can operate there, there's a lot of the competition goes away because it's like hard to do. Now, at the same time, a lot of those things, so goes California, so goes the rest of the country. One example of that is the emissions regulations for automobiles. There's 49 state compliance, and then there's California. Ford and GM and Toyota and Mercedes, and everybody makes a car. They make it for California because they don't want to make a California version of the car. It's one of those things that like bleeds over from that standpoint. But it also, in this case, you don't want to have a physical presence there. Great. You'll have to deal with it. So we were working with this institution and they had a product that they wanted to send out. And it was an offering that, again, omnichannel. They wanted to do digital. There was an app-based part to it, and then there was a direct mail piece. And they really wanted to, there was a timing element to how this one offer was going to work. And they wanted to do two things with it that they were unable to do. One was personalize it to the individual level. So actually a loan product, and they wanted to be able to send the customer based on what they knew about them, their history, what their credit rating was. Essentially, you are qualified for X amount at this percentage, right? Like for what they were doing. And stipulations about, we're going to look at it again when we come in, but to be able to send it like a one-to-one piece and then track that all the way through the process. So if somebody took that mailer, walked into a branch and said, I'm interested in this, within 5 to 10 minutes, they would be able to like have that product done and have it provisioned for them and track all the way through. So take all the friction out of the process. And it was tricky because in order to do that, you had to look at one, their just base marketing information that they had about their existing customers and the prospects. Two, their underwriting system that was going to sit down and say, based on what we know, this is what we would offer to that person. And then three, into their core application, that if somebody just had this thing and it was barcoded at QR code or otherwise identifiable, you could very instantly pull all that information out and create the offer and then have all of the closing documents ready there to sign. Again, within a few minutes. And it was tying all those things together in such a way that obviously it would work and it would be efficient, but that it would also be compliant, that they would be able to show this compliance requirements that they had, particularly with the added requirements for the state of California because of like how this thing was structured and doing it. And so we were able to help them with that and string all that together and add all the hooks into it from the outside so that all of the outbound advertising was tied into the same information, right? You were getting a personalized card in the mail that was addressed to you, had all the details of the offer in there and the tracking information that they could go back and look and say, oh yeah, no, this is what we offered him and let's go ahead and provision it right now. And they had a very clear vision of what they wanted to do and how they wanted to do it and what was going to fit within their risk profile. It was just tying all those pieces together, right? All of those things existed already, but they didn't have that way of going from A to B to C in a way that was efficient and was going to be compliant. And that was really what we did and how we helped.
Certainly. And what sort of results did they get from that endeavor?
Yeah, it went on for quite some time. I know in the initial campaign period, which was either 30 or 45 days, they saw about a doubling of the response rate. And then it was a combination of both the response rate that they got from the mailing and the online, but then also there was I think they got another 15% or so out of the close, like that final funnel close, either the call center or in person or online application part, because they were already dealing with highly qualified customers. So yeah, it was one of those things where for the periods that was running, it put them well into everybody's getting the max bonus. Everybody was happy with that. Right? So the underlying financial results for them were very positive.
Mhm. So for companies that are going, what you describing, which makes sense, and it's true that we probably have a lot of pieces already in existence within our organizations, what would be a good place to start with in order to leverage the static-driven approach that you're talking?
Sure. Yeah, we usually think about it in kind of three large steps. And the first one is looking at the data itself. And this is, are you collecting everything that you do? When we look at kind of customer funnels, business line funnel, web analytics usually plays like a big part in it. So that's an area that we'll look at. There's a surprising, even now to this point, like I'm just trying to think, as we do this in early June, we're within a few weeks of Universal Analytics, Google's Universal Analytics from going end of life.
Yep.
And customers having to go to GA4, there's a shocking level of organizations that have not taken that step, despite all the warning and flashing lights that Google seems to be saying. But like, that's a real knock level of, okay, are you doing this and are you going to lose all this data in a couple of weeks? You're going to lose this insight into your customer's experience. What else are you doing? Your transaction level data, your CRM data. In the banking world, there's a legacy view of CRM called MCIF, which is a view of that. But like that kind of like customer demographic, the history of your interactions with them that are maybe non-transactional. What else do you have from a research level? You think about population studies in the US, the federal government does a census every 10 years and then does models every quarter that is given to companies, and you can like subscribe to more detailed versions of it. But looking at that for growth rates within all the way down to the neighborhood or zip code level, growth rates at different age levels, different demographics, different socioeconomic levels, like being able to look at like that information and understand share and where opportunity, looking at things like your position competitors. How are your competitors doing? What is their growth rate compared to you? Again, this is one of those benefits of being in a regulated environment. Even private banks, private organizations still have to file with the organization within the Federal Reserve, of the FDIC or CUNA for credit unions, but they file quarterly reports that basically show their balance sheet and their income statement. And so you can look at your direct competitors and go, how did I do against them? Some of it you have to infer, but it's an incredible level of detail to understand what that's like the first level pass of, do you have all that? Are you collecting it? And then the next level is, now, do you have some kind of semblance of governance? And I would say like little g governance. One, you're protecting the things that you have to protect from a compliance standpoint, but are you making it available in a usable form for people who need it? Your analysts, your data scientists, your people that are doing your digital marketing? Can they get to what they need to? And if they can't, how can we do that in a way that satisfies compliance, satisfies your risk requirements, but then also allows your people to get the best out of it and provide the best service to their customers? Collection and governance is your data in your data house. And then the next step becomes that aggregation. Because most of the time, all of those different pieces of information are all siloed. They live in different organizations. Mm-hmm. There's no way to make that correlation of, here's what my best customer looks like. Here's a series of transactions that happen that may signal that this person that I maybe have no background with or no information, they may be my ideal client for this product line. How do I connect the dots to say, therefore, let's put them into a personalized funnel, give them the information they need, do the outreach to them, whatever your marketing go-to-market is going to be, the marketing tactics that are going to have the highest chance of converting them, but get them in there and understand where they are, understand if there's a leaky part of that funnel. Where do you want to be able to like automatically create an audience that you want to retarget to? These get into the things that like e-commerce tools do very well, that funnel optimization aspect, but being able to bring that all together and see it. And so sometimes that's data warehousing. Sometimes it's something like a customer data platform that kind of helps you do that. Sometimes it's like just keeping track of things in a more ad hoc manual process, but still using the same thought process, bringing it together, showing where it is. And then the last step is the activation. It's the actual go do the thing. And the more automated, the better. So the idea of, I've done this aggregation, I have this modeling, I can identify an opportunity. Now let me do something about it. Let me put them into in an email campaign that's going to reach out to them, or an SMS campaign, or an interstitial pop-up on our app, or whatever the experience is that means, or good old-fashioned direct mail outreach, whatever the piece is that says, this is somebody who is qualified for this process that we're going up. Let's go do it. Let's do it automatically. Let's do it in volume. And let's be really efficient about it and get the feedback and the metrics that helps us understand what's working and what's not. Those three steps, right? Like the data and the governance level, the aggregation level, and then the actual activation level. If you think about what you're doing in those three levels, whether or not it's going to involve some level of automation or adding a software layer. And that's, you'd figure that out. Like that's solvable, right? It's just thinking in that construct and being able to say, this is the ideal path that I want this type of customer to experience. Great. Go build it, go do it, show that it works. You can automate later when you go about it. Once you have that kind of sound mass or the amount of information you need to prove that this is a valid approach that you want to go after, and then be able to scale from there.
Correct me if I'm wrong, but there's certainly a value in not just collecting data and first-party data, which all of these financial institutions should have, but also mapping the customer journey right across the organization as well as the touch points to maximize the data and ensure that the overall experience from the customer's point of view is what it should be.
Yeah, but a lot of times this doesn't, that sounds very obvious to say, but a lot of times it isn't, right?
Yep.
You think about this and go, obviously my best customers are the ones that have the biggest deposits. Okay, sometimes, but there's only probably so many millionaires that are living in within 10 miles of one of your branches that is the area that you target, right? That may be a no list. What else? What's next? So here's one example of an emerging opportunity for banks. There's a lot of pressure from the US federal government, banks, and other types of companies around fees, particularly hidden fees, right? There's the director of the Consumer Finance Protection Bureau is a guy named Rohit Chopra, who used to be in the Federal Trade Commission. And he loves to be on TV and loves to talk in front of Congress, and he's good at it. But he'll just harp on junk fees, look at this, and every once in a while he'll take a swipe at banks, right? About non-sufficient funds and funds for overdraft checks, so many ATM transactions and all this. And so the writing's on the wall that you're going to get more pressure on this as a bank. These kind of like fees that are in there. This is a problem for a lot of banks because when you look at that, the way that banks make money is a big part of it is their what's called the net interest margin, which is basically the difference between the cost of the money that I borrow and the cost that I make when I lend it out. And that's a good chunk of it, but that's not all of it. Another big part of it is what's called non-interest. And a good chunk of that is like fees for origination, for lending, but then also fees for like transactional fees. And the non-sufficient fund fees a long time has really offset like checking accounts, like basic consumer checking. So banks' ability to offer free checking as a differentiator, as an offer to their customer, often comes with this fee structure on the back end that just kind of offsets for that, right? Now, if you ask Rohit Chopra, he'll say that's a bait and switch, right? You're giving me something for free that has all these gotchas on the back end, but that's really how that bank operates, right? And you can't go in there and say we're gonna take off anywhere between 15 and 30% of your income and just say it's now illegal for you to collect that. Have a nice day. Like that's not sustainable for any business. So one of the things that they're looking at, and there are a number of banks that have gone down this path, is to say, what other ways can we replace that non-interest? And there's only so much you can do from the finance side because that's market rates and things. And competitive pressure on one end and more or less market rates on the other. Is they look at things like debit transactions. And so this is the idea of the difference between a credit and debit transaction. And banks do very well, particularly banks below that 10 billion mark, on debit card transactions. So if they were to get more customers that would use their debit card more and incent them to do that, or find ones that kind of fit with their lifestyle, fit with their philosophy of their personal finance, or educate them on that and set them in other ways to do it. There are a number of banks that found that they could completely offset that loss of fee revenue that way. That is a fairly forward-looking strategy right now. The number of banks have jumped into both fees and said, we are eliminating all fees, no fees for checking, no overdraft fees or anything. But they're also actively recruiting the type of customer that will generate what's called interchange fees that are paid by stores and other retailers for the use of their debit card, right? Like the interchange fees for Visa, MasterCard, and et cetera, Euro and use. So But what that makes them do is to say, we're servicing a different type of customer. I need to find customers that are going to do a lot of debit, maybe 20 or 30 transactions in a month. That's a completely different profile than they were targeting before, or it was like very much a niche profile. But what it forces them to do is to say, let's look at our existing customers. Who is like that? They may not be our most profitable market segment today, but we want them to be. We want more of them. So, marketer, go find me more people that look like this, that have this type of spending profile for what they're doing. And it's only when you're able to bring all that stuff together to do that like cogent analysis and then have a way of activating it through your go-to-market that you're going to be able to do that in timely fashion at all. Particularly if they're doing like a wholesale strategy change.
Mhm.
It is totally possible. And it is totally possible for an organization that traditionally, particularly from an IT standpoint, is not high skill and is not well resourced to do it. But it is well within their possibility.
Mhm. Also curious, is there an element of culture and with that enabling various people to access elements of data to allow for experimentation? Because I'm sure that there are points of view and perspectives, staff right across the institution who would have ideas to better serve their customers, be it through a digital program, otherwise, but probably doesn't have the access to data and the authority to implement. So is
Yeah,
there something to be said about the culture that needs to be shaped within these organizations
absolutely.
in order to allow
Yeah.
for that level of experimentation?
I will tell you that for a lot of the marketers that we deal with, that is the biggest problem they have. That the organizational change management aspect
Mhm.
of things is the bigger barrier to them than any technical or even budgetary issues a lot of times. Or it's being completely dismissed out of hand. I had a marketer I talked to recently who said, "Hey, we had this plan to go do this whole digital customer analytics, lifetime value modeling, everything about it. And my whole budget for that got zeroed out so we could do a college football stadium sponsorship, like naming sponsorship, which I mean, sure, from a branding standpoint, I got it. And it wasn't completely bonkers, but he went from having something that was going to have an insane level of accountability and traceability, and they knew exactly what was going to work and what was not going to work, and a provable ROI, to having their name splashed across a college football. It was like he was flabbergasted. That's what he was up against. And that was his problem. That's what he was up against. That's the type of institutional inertia that he's trying to get over. So absolutely, that's the case, right? It's very much, I think at this point, and particularly when we start talking about anytime you throw in machine learning or AI, right? Which is not quite the way it used to be when you'd say that. It was almost like you were saying magic, right?
Yep.
You see, we're going to sprinkle magic on it and it's going to work. It's not there now. Like a lot of at least just the understanding of what the potential is. And so many consumer things that people can touch and try it and understand what it is. And that's the barrier on that has gone down, at least the skepticism on that has gone down. But there's still this element of, when you think about the Rogers diffusion of technology, right? The early adopter to the early and late majority, right? The
Mhm.
classic crossing the chasm problem. In this aspect of banks and institutions like this that are looking for something that is risky, for something that might not work in order to get an advantage, in order to get a competitive advantage, meaning they're not looking for the thing that everybody else is doing. They're looking for the thing that's going to be able to set them apart so that they can run ahead because they're able to do something the competitors not, or they're able to do it at an order of magnitude less cost. That's still a minority. We're still in that early stage of
Yeah.
there's not a lot of people that look at this area and have that kind of keeping up with the Joneses aspect of, I have to do this to be competitive.
Mhm.
Only those real thought leaders that are saying, this is how we're going to stand out. Like we're going to offer a level of personalized banking, personalized financial services, unlike you can get anywhere else. Because everything else that's in our portfolio, other than from like a rate standpoint, which tends to hurt the bottom line standpoint, is largely very lightly differentiated. I won't say undifferentiated. I won't say a commodity. A checking account is a checking account is a checking account, right? The differences in features and aspects of it, and like maybe how you combine it with your business, or maybe I'm able to combine it with my home loan, or, oh, you can point me to this like other insurance company, right? Like those combinatory aspects of it. But by and large, they're trying to differentiate on what the experience of working with them is. What that experience is, your ability to get help, to get someone on the phone when you have a problem or you have a question, huge differentiator for them, massive. And they're the ones that are thinking ahead, that are saying like, this is what we're going to win on. We need to turn that up to 11 at every touch point that we have with our customers, every touch point on the bank with the brand. That's really the ones that are going to stand out in the space, are the ones that are doing that are thinking along those lines. Because there's a lot of competitors that they're up against that traditionally were not competitors. If you look at the investments that's gone into fintech industry, right, financial technology, in the past 5 years, I'm trying to remember what the numbers are, but anytime you look at the charts and it's this huge hump, right? They started right around 2019, starts ticking up into 2017, a little bit in 2018, 2019, and then 2020, particularly when brought it up, massive, right?
Yes.
Huge, like incredible. And a lot of it gets into unbanked scenarios, particularly in developing countries. Like Latin America was like leading the way, or several quarters in there where like they had the biggest deals, the biggest deal sizes. But there's like a number of these like technology driven companies that are starting to compete with community banks that they never competed with before. And their leadership may not consider competitors. Apple, in conjunction with Goldman Sachs, not only has a credit card, they have a buy now, pay later offer, and they also have a savings deposit, right? Now, are they a bank? Is Apple a bank? I think technically no, because of this partnership they have with Goldman Sachs. But from a consumer standpoint, yeah, they're offering them a lot of the same things that they're going, do I go with Apple and do everything on the phone and it's really easy? Or do I have to drive downtown and fill out 10 forms with you? The biggest areas we saw this, particularly from about 2015 or so, was peer-to-peer payments. So in the US, it started off with Venmo, and then there was a fast follower with Cash, which is actually part of Square now. And the chart I saw that came from, I think it was ARK Investment, that did this analysis of it, where they said the biggest consumer-facing bank in the US, JP Morgan Chase. And they have had this like steady stream of acquisitions from about 1990 up until this year, where they had this measure for like, how long did it take them to get to, I think the number was like 10 million deposit accounts, like the number of accounts, some lots of zeros on the end of it. And it was like, it took them like 30 plus years. And they looked at Venmo. Now, obviously dollars are different, right? Because it's consumers versus some big ones. But Venmo did it in 8, and I think Cash App did it in 5.
Yep.
And they were like on this exponential growth curve when they just like were counting heads, counting accounts. They had zoomed past, right, at this like phenomenal rate, because they were able to jump on this one area that, between a gap from a regulatory standpoint, and particularly things that came out of the great collapse in '08 and the Dodd-Frank regulation that kind of came after that, taking an area in that, plus kind of the proliferation of mobile at that point, those two things combined to just give them jets. And that was the thing that really kicked off this kind of wave of fintech in the past 5 years, which is all of this to say is they have this new set of competitors that are built around being very heavily data driven, very heavily machine learning model driven, and like their approach. optimization of everything that they do from a customer unit economics, onboarding, customer lifetime value maximization standpoint, like that's will make your head hurt, right? The amount of brain power and compute power that kind of goes into that. That's who they're competing with. And a lot of times they don't even realize that like that's who their customers are thinking about, like instead of them or leaving
Yeah.
them for them.
Brilliant. I'm sure we could go on for quite a bit longer, Rich, but I'm curious with this whole idea of being data driven, do you find there's perhaps a couple of areas that don't get much airtime? If so, what would they be?
I think it's thinking about it, first of all, from a strategic imperative standpoint, whether or not this is considered to be an existential threat. And it's one of those areas where, because it's a regulated environment, that gets a little fuzzy, right? You could always have tomorrow, the government shows up and goes, yeah, this competitor that you had, we're just declaring their business model illegal, and they go away. And in the crypto space, you're actually kind of seeing that right now. The SEC, the Securities Enforcement, what's SEC stand for? I remember. I think it's Securities Enforcement. Basically, people that register like stock trades, equity trades, things like that. They just recently sued Binance and Coinbase. Coinbase, who was like the poster child of consumer crypto companies in the US. They're facing a lawsuit from the SEC that, depending on how you want to read it and how it may play out, is basically saying your company is de facto illegal in what they do. So that whole idea of is fintech an existential threat to community banks is still a question
Mm.
in a lot of people's head. And I think from my standpoint, I think it's still a question. So, that part of it's going to hurt, we're facing it, but is it necessarily something that's going to make us obsolete from that standpoint? I think on the other side is thinking about what size do you need to be competitive? And from a data standpoint, from a how we're driven, is it going to be a customer level metrics? Am I valuable because of the value that I provide to my customers and I'm obviously able to extract in the economics of that customer? Or is it the size of my balance sheet? That there is and frankly, a perfectly valid strategy that says the way we're going to win in the market is through M&A. We're just going to get bigger, right? The way I compete with bigger institutions is to get bigger myself.
Mm.
The problem is there's this wasteland in the regional bank space. And we've seen that recently in the shakeout, even for banks that are in that kind of, I'm, hundreds of billions of dollars of assets, but I'm not quite a trillion. Even ones that are like well managed, have perfectly great risk profiles, they're seen as risk just because of Silicon Valley Bank and Signature and First Republic and ones like that, right? They're seen as just a risky institution. And at least in first quarter, they led that class of bank led the way in asset. Like they lost the most number of assets. Customers were saying, I'm moving my money. I'm going completely outside the system into something direct or some fintech company, or I'm going up to one of the top five that are multi-trillion, too big to fail bank. Interestingly, community banks on the smaller side, right, that kind of below 10 billion, they had the smallest asset loss as a group. Individuals different, but as a group, they did better than the biggest banks, adjusting for some M&A stuff. Which is to say, they are still garnering quite a bit of trust from their consumers. And they are doing exceedingly well in their ability to hold on to their customers, even in times of uncertainty, and still perform well from a financial standpoint.
And to wrap things up, Rich, if you were listening to this episode, what would you say would be your top takeaway?
I think it's the idea of your first party data, the data that you have about your company, about your market, about your customers, about what's going on. that is only going to appreciate in value. That is going to be a much bigger asset going forward. You look at things like the elimination of third-party cookies from the Chrome browser. I know that's an incredibly nerdy thing to talk about, but just like that is a technical implementation of a kind of market trend of more privatization, less kind of surveillance of customers. Customers, the market is becoming more sensitive to that. But your relationship with your customers, that very much your data. You are obviously charged with protecting that and using it within both the spirit and the letter of what the regulations are and what you've promised to your customers and maintaining that trust. But your ability to leverage that to provide more relevant service, more relevant products to your customers, that is only going to become more and more valuable. So first party data as a competitive asset, be long on that. Think about that from the standpoint of this will be a way in which we will create significant value for us going forward.
And for listeners who are curious and want to find out more or connect with you, where would you recommend they head to?
Sure. Our company, MindSpan Systems, it's mindspaninc.com. And you can reach out to me on LinkedIn or Twitter. I'm Rich Edwards on both platforms, LinkedIn/Rich Edwards or Twitter/Rich Edwards.
Great. We'll include links to those in the show notes.
Yep.
Rich, this has been terrific. Thank you so much for doing this.
Thanks.